Good morning. It's Christian of CPM Group. It's a little bit after 11 o'clock on Tuesday, the 26th and 2nd of August here in New York. I'm going to talk about the markets and what is facing the markets right now. On Friday, I was talking about the fact that this is an interesting week because we have the BRICS meeting this week and the Kansas City Fed annual summit in Jackson Hole, Wyoming. But in the meantime, nothing much has been happening. Precious metals prices have been pretty much range bound. I mean, gold prices have come down from close to $2,000 in May down to around $1,922 as they are right now. But they've been holding up much better than we thought they would be during the summer months. There's still some scope for weakness in August. But we are getting through the summer period, which is a traditional period of seasonal weakness in gold and silver prices, with prices holding up relatively well. I'll talk about that in a second, why it is. We've been expecting some quietness and weakness in the summer months, the second and third quarters. We've seen that. Prices have held up better than we thought. We continue to expect that the prices will strengthen in the fourth quarter of 2023, and the fourth quarter may well start next week. It may be the last third of the year as opposed to the last 3 months of the year where we see gold and silver prices start strengthening. But we still hold those expectations that after this quiet period in the second and third quarters, we'll see stronger prices toward the end of the year and into 2024. Why? Well, I think one of the reasons why the prices have been stronger than they have been, than we might have thought, but also not rising sharply, is that economic conditions in the United States, Europe, and other countries have been much better than the market consensus had it. At the beginning of this year, there were a lot of people saying we're going to be in a recession or we're already in a recession and we just don't know it. CPM Group's view was that a recession is somewhere off in the horizon, possibly in 2024, although we're reconsidering that given the strength that we're finding in the overall economy. Problems remain, a lot of problems remain, but the economy is showing much greater strength than market consensus had it. Interest rates have risen sharply, but they haven't risen so sharply as to really throw the economy into a recession. We've seen negative impact on auto sales and on housing sales. We've seen mortgage rates rise, and we're seeing adjustments in those two very important portions of the economy. But you're still seeing very strong labor growth. You're seeing business investment, and consumer spending is holding up relatively well. China is experiencing weaker economic conditions than a lot of people thought. The snake oil salesmen say, it's going to collapse. The Chinese economy is going to collapse. We don't think that that's there. China has issues that the government, we believe, can deal with. China has a lot of cash. It has a lot of tools, policy tools, and it has a greater ability and willingness to manage its economy and deal with economic issues than U.S. politicians have. So China remains a weak spot in the global economy. That's probably being reflected somewhat in the moderate prices of gold and silver. But it's not, we don't expect it to get tremendously worse. I believe that the government can manage to stabilize the economy and move it forward. Political conditions have been relatively quiet. There's been sort of a status quo over the last month or so. This is probably going to change, and it's probably going to change in the final 4 months of 2023. And we think that global and domestic political issues in the United States, the UK, Europe, Russia, China, and other countries will all start to have a greater effect of stimulating investment demand for gold and silver. In other words, we think that the political environment is going to get worse. Now, what to expect from the BRICS meeting? Not a lot. The BRICS members, state leaders, expect different things out of this meeting. The primary factor that they're going to be discussing is whether they should expand their membership. There are about 40 countries that would like to join. Some of the 5 current members would like to keep the BRICS group as somewhat exclusive. China wants the BRICS to expand to give it more global authority or power. It thinks it would. Brazil and South Africa want to remain globally non-aligned. They're concerned that being member of BRICS might suggest to people that they're more pro-Russia than they are. Brazil is not so very much pro-Russia. It actually voted to condemn Russia's invasion of Ukraine. South Africa has always been more pro-Russia, at least in terms of the government. The Zuma government was committing to spend billions of dollars on obsolete Russian nuclear power technology when it was in power, even though there are companies within South Africa, Sasol being one, that have much better nuclear power technology that's cheaper, better, more modern, more easily controlled. But there's been a pro-Russian leaning toward Russia on the part of the South African government over the last couple administrations. But South Africa as a nation and in general wants to remain non-aligned. Russia, meanwhile, is seeking allies of any sort, anybody that they can say, oh, these guys are with us. China wants supporters for its aggressive stance toward Taiwan and its more aggressive stance toward the world. And India just really wants status and recognition as an important nation that demands and commands respect, because Modi doesn't really feel that his government gets the respect it should. People have talked about accelerating the use of local currencies for international trade settlements. De-dollarization is not even on the formal agenda to be discussed. And I'll talk about that a little bit more. In terms of what BRICS is and what the future of BRICS is, it's kind of like a weird thing, because the term BRIC was invented as a marketing hype by Goldman Sachs in 2001. They noticed that there were these economies that were emerging in power and size: Brazil, Russia, India, and China at the time. South Africa was added several years later, many years later, that were growing in economic importance but had been overlooked by investors. And so they coined the term BRICS. The first BRIC summit was in 2009 in Russia, and it's continued to be there. I think it's important to understand and put it into context. In 1961, Yugoslavia, India, Indonesia, Egypt, and Ghana got together and they organized a meeting to create what was called the non-aligned movement. It still exists. The idea was that these countries, even including Yugoslavia, which had broken with the Soviet Union at the time, these countries didn't want to be seen to be part of the capitalist bloc dominated by the United States, but they also didn't want to be seen as being aligned with the communist world of Russia, China, North Korea, and the Russian satellites in Eastern Europe. So they really wanted to be non-aligned. The non-aligned movement still exists as an organization. It has about 120 country members. It's headquartered in Jakarta, and it meets once a year. The BRICS currency position, I want to go into this. As I said, the objective of de-dollarization is not even on the formal agenda for today and tomorrow and Thursday. It's a 3-day meeting. There's no gold-backed currency being on the agenda. That's Putin's pipe dream. The other 4 countries do not want a gold-backed currency. The idea of a single trading currency is one that defies logic. It would be extremely difficult to create. It would be disastrous for 4 of the economies, if not all 5, and it probably wouldn't work. and the governments don't want it. The plan is hindered by a lack of local currencies to cover trade. So really what they're talking about is why don't we use our own currencies to settle our trade, capital flows as well as trade flows. And the problem is that there's a lack of local currencies. Russia wanted India to use rupees to pay for its oil and gas imports. There weren't enough rupees floating around to have that happen. You may remember that at the beginning of this year, the Central Bank of Ghana created a gold for oil program where it said they ran out of U.S. dollars to buy imported oil products, mostly diesel fuel, but also gasoline. And so they said, well, look, we don't have dollars to buy, to pay for the imports that we need of refined oil products, but we'll pay for it in gold. Or if the oil importers don't want gold, we'll sell gold from our central bank reserves to generate foreign exchange reserves, U.S. dollars, to pay for the oil and gas. There's a lack of rupees. There's a lack of rubles. And foreign exchange restrictions in all 5 countries would make it even more difficult to settle trade. If you want to trade in yuan, you can expect to pay a 30% fee in terms of fees and tariffs and taxes to trade in yuan between China and whatever other country you want. You probably have to face that with other currencies too. At the dollar's value, it's more dependent on dollar holdings than the dollar's use of international settlements. And it's also dependent on the relative strength of the U.S. economy. Half of the pension funds in the world are U.S. pension funds. And many of the other pension funds are denominated in U.S. dollars. The U.S. dollar represents something like 70 or 80% of financial wealth holdings on a global basis. That is much more important in determining the dollar's value than the dollar being used in trade settlements. So there's a lot of nonsense being said about currency markets and de-dollarization, and you can probably safely ignore that for a couple decades. Now, the obstacles, the non-aligned movement, as I said, has been one of the key movers behind reforming membership of the United Nations, the World Bank, and the International Monetary Fund. They would like to see the membership better represent the current status of nations worldwide. Hasn't really been adjusted significantly to represent the fact that the U.S. is no longer 40+% of world GDP. It's down around 22% or so, although the wealth is still more than 50%. They've been pressing for these reforms for decades, and the United States and European governments have been refusing to significantly or substantively reform these institutions' memberships to better reflect the state of the world. In essence, they've been telling other countries, including Brazil and India and South Africa and China, that they don't care to have them being really fairly represented on a global, international, intergovernmental basis. And that provides impetus for the BRICS or the non-aligned movement or any of these other regional groups that you see to seek to reduce the effectiveness of the established international institutions. They want to replace the post-war international intergovernmental system and regime with something that is more representative. And the United States and Europe, having resisted that, have made it more likely that it gets replaced rather than reformed. They're not interested in reform. They're not interested in giving up power. As Nancy Pelosi said many years ago, no one gives you power. You have to take it. And the U.S. government and the European governments have not been willing to give power. Now, what to expect from the KC Fed's Jackson Hole Conference? They've been doing this for about 46 years. The theme this year is structural shifts in the global economy. There's a lot of concerns about the state of the economy, both in terms of the United States and on a global basis. We've seen reduced global trade over the last 4 years, and reduced global trade means reduced global economic growth and perspective, the capacity for growth. It's really tied in with global trade. And the political tensions that have built up for decades, but they've gotten much worse since 2020, have reduced that global trade and reduced the potential for economic growth on a global basis, as well as within individual countries. Even though headline and core inflation rates are down, there's still a lot of inflationary pressures remaining, and the Fed is extremely concerned about that. Lower oil and natural gas prices have masked these, lowering the headline inflation. But if you look at the core inflation and you look at the dynamics behind the increases in prices for goods and services, you see that there's still a lot of inflationary pressures that could be worrisome. There'll also be a discussion about new interest rate regime. We've gone through several phases. You had the post-war period, which lasted until 2008, where interest rates were several percent. My first mortgage was 11% in 1981. We paid it, we lived with it, and we remortgaged when interest rates were half of that. So we've gone through a period. We went through a period where interest rates were normalized. Then we went through this extended period where interest rates were virtually zero from 2009 into 2019, really. Since that time, we've started seeing, since 2021, we've started to see interest rates rise again. We're going into a new period of higher interest rates, which is probably going to last for many years. And that has important implications for the global economy as well as the U.S. domestic economy. We've already seen that the difference between 0% interest rates and 5% interest rates has negative effects for auto purchases, auto loans, and housing. But we've also seen that 5% interest rates, or 5.3% now, are not necessarily that destructive of economic activity in other sectors of the economy. And that's going to be discussed and studied. It's been being studied. It's going to be discussed at Jackson Hole. Fiscal excess is going to be a big problem. Monetary responses and assistance in dealing with those fiscal excesses, that's going to be discussed. And then threats to global growth and Western control of the overall economy. Russia and China are primarily those factors. So those are the topics that are going to be discussed Thursday, Friday, Saturday out in Wyoming. And earlier topics are going to be discussed in Joburg today, tomorrow, and Thursday. Be interesting to see where we are, not necessarily Friday when I do my next video, but next week. In the meantime, you can go to our website. You can read some of our free reads and videos and things like that. You can order our yearbooks or other research or in consulting. You can send us emails at info@cpmgroup.com saying, hey, how can CPM Group help me? In the meantime, have a good week. Be good. Be good to yourself. Take care of others around you. And try to find something good to do for the world. I'll talk to you on Friday.